Have you ever stopped to think that a war can quietly start affecting the money in your bank account? The price of the gasoline you pay for, the cost of your groceries, and even the stability of your job. Most people don't make that connection right away. For many, war is something purely military, something that involves soldiers, airplanes, ships, and decisions made by governments in closed rooms. It seems like a subject that belongs only in the news, to international politics experts, or to strategic analyses on television. But there is a much less visible reality happening at the same time. Whenever a large conflict begins, especially when it involves countries that are important to the global economy, a second war begins alongside it. The economic war, and this war doesn't appear with tanks in the streets of most cities, but it shows up in the price of gasoline, the cost of food, transportation expenses, interest rates, inflation, and the growing feeling that money seems to stretch less and less. Now think about something that almost nobody asks directly. Who actually pays for a modern war? When we see images of military equipment, missiles, fighter jets, and complex operations, it looks like all of that is simply part of a dispute between governments. But in reality, conflicts of that size have to be financed somehow. Equipment, fuel, logistics, technology, training, military operations, everything costs billions and sometimes trillions of dollars over time. And when a country enters a large conflict, it has to find money to keep that massive machine running. Usually there are three possible paths: raise taxes, issue more public debt, or create more money within the economy. In practice, it is almost always a combination of these three things. And it is exactly at this point that war begins to directly affect the financial lives of ordinary people. When we look specifically at a conflict involving the United States and Iran, there's a factor that makes everything even more sensitive: energy. Iran occupies an extremely strategic position within the global energy system, not only because it has enormous oil reserves, but also because it is located in one of the most important regions for the flow of energy on the planet. The oil produced in the Middle East supplies a huge part of the global economy, and any threat to that flow immediately creates concern in the markets. Companies, governments, and investors know that energy is one of the foundations of the entire modern economy. Without enough energy, transportation becomes more expensive, production declines, supply chains become unstable, and prices begin to rise in almost every sector. When there is a conflict involving a region that produces and exports so much energy to the world, the market begins to react quickly. Even if the oil supply is not interrupted, the mere risk of disruption is enough to create instability. Investors begin to act preventively. Companies try to secure supply in advance. Governments closely monitor their strategic reserves, and this collective behavior creates pressure on energy prices. The result is that oil starts to rise in international markets. The problem is that oil doesn't affect only the energy industry. It is present in practically every gear of the modern economy. The fuel that moves trucks, airplanes, and ships depends on it. The transportation of food depends on it. The production of fertilizers depends on it. The manufacturing of plastics, packaging, synthetic fabrics, and countless industrial products also depends on it. When energy prices rise, the cost of transporting food rises, the cost of producing goods rises, the cost of distributing products rises. And these changes slowly begin to appear in people's everyday lives. At first, it may seem like just a small increase here or there. $1 extra for fuel, a few more dollars on grocery purchases, small adjustments in products that once seemed stable. But over time, these increases spread throughout the entire economy. And this is when many people begin to feel something that is difficult to explain. A sense that money doesn't seem to go as far as it used to. The salary stays the same, but expenses grow. The budget starts to feel tighter. The margin of financial safety shrinks. But this is only part of the story. There is a second layer happening at the same time within global financial markets. Whenever an international conflict begins to escalate, investors around the world switch into defense mode. Investment funds, banks, and large capital managers begin asking a very simple question: where is money safest right now? When that question appears, enormous amounts of capital begin moving around the world. Money starts leaving assets considered riskier, such as smaller companies, startups, more sensitive sectors of the economy, or emerging markets. At the same time, that money runs toward assets considered safer, such as US government bonds, gold, or the dollar itself. This movement creates huge waves within financial markets. Stock markets become more volatile, Stock prices can rise or fall quickly. For people who have investments, retirement accounts, or brokerage accounts, this volatility can create a very uncomfortable feeling. It can seem like something outside your control is interfering with the future you were trying to build. But there is still a third layer in this story, and it may be the quietest of all: the impact of public debt and inflation over time. Because wars cost enormous amounts of money, governments frequently increase debt issuance to finance these expenses. When a government needs to issue more bonds to raise funds, it must convince investors to buy those bonds. Often, this means offering higher interest rates. When interest rates rise to finance public debt, the entire credit structure of the economy can be affected. Mortgage financing becomes more expensive. Business loans become more expensive. Consumer credit becomes more expensive. This slows down investment, slows down consumption, and can reduce the pace of economic growth. In addition, when there's a large-scale increase in government spending, there is always the risk of rising inflation. Inflation works like an invisible tax within the economy. It doesn't arrive as a direct charge. It appears slowly, reducing the purchasing power of money over time. Your salary may remain the same on paper, but it buys fewer things. Your savings may appear intact, but they lose real value as the years pass. For many families, this gradual loss of purchasing power creates a constant kind of stress. Concerns about the future, financial stability, and the ability to deal with unexpected events begin to emerge. This type of financial anxiety has a deep psychological impact. People start doing calculations all the time. They think twice before spending. They feel afraid of unexpected problems. Small expenses that once seemed normal begin to feel like bigger threats. And when the mind enters this constant state of alert, financial decisions often begin to be made based on fear, not strategy. Some people sell investments at the worst possible moment out of panic. Others take on expensive debt, trying to maintain their standard of living. Others simply ignore the situation completely because it feels too big to face. Economic history shows something very important about moments of global crisis. They never affect everyone in the same way. While some sectors of the economy suffer, others may grow. While some companies lose value, others become strategic. International conflicts often accelerate changes within the global economy. Sectors connected to energy, defense, technology, cybersecurity, infrastructure, and domestic production may gain strategic importance. The world begins to reorganize itself around new economic and political priorities. But for the average person, the most important point is not trying to predict exactly which companies or sectors will rise or fall. The most important point is to build a financial structure capable of withstanding periods of instability. This begins with simple things that become extremely powerful over time. Having an emergency fund, keeping debt under control, avoiding committing your income to expenses that remove financial flexibility, investing in a diversified way. When someone has a financial structure in place, periods of uncertainty stop being. A person can breathe, analyze information calmly, and make better decisions. Those who do not have this structure often enter survival mode, and in that mode, the human mind tends to make more financial mistakes. That's why understanding what is happening in the world is not just political curiosity or interest in international news. It is a form of financial protection. It is realizing that global events can turn into very concrete changes in everyday life, affecting prices, jobs, credit, and economic opportunities. By understanding these mechanisms, you begin to look at crises in a different way. Instead of reacting only to headlines and collective fear, you start to see the systems behind the news. History shows that wars, energy shocks, financial crises, and periods of instability have happened many times over the decades and will probably continue to happen in the future. But people who maintain financial organization, mental clarity, and discipline in their decisions are able to navigate these periods with much greater stability. At the end of the day, money is not just about accumulating numbers in a bank account. Money is about creating space to make decisions calmly, even when the world seems uncertain. It is about having enough margin to deal with economic changes without falling into despair. It is about building enough security so that global events do not completely destroy your personal stability. If you made it this far, I want to ask you for one simple thing. If this content helped you better understand how an international conflict can directly affect your financial life, leave a like. This helps this type of information reach more people who are trying to understand why money seems harder and harder to manage. Subscribe to the channel, because here we talk about money in a simple, direct, and honest way without magical promises and without dangerous shortcuts, just explaining how the economy really works in real life. And comment a word down below so I know you watched until the end. The word is prepared. If you comment prepared, I'll know that you want to start looking at your money with more awareness and more strategy, especially in times of economic uncertainty. Because in moments like these, clear information is not just knowledge. Clear information is financial protection.